Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. You get the Dow Industrials up 47. Nasdaq's down 10. S&P's a flat. Gold contract down $10.10 at $1,216 an ounce. Silver off 6 cents at $17.88 an ounce. Platinum down 10 at $1,336 an ounce. Copper flat at $3.08 a pound. Light sweet crude down 61 cents at $92.46 a barrel. Bonds, you have the 10-year down 8 ticks at 124 even. Oh, up 8 ticks, rather. It already ejected lower price once again. Didn't even make it to the swing point, which is pretty impressive. 30-year up 28 ticks at 136.19. King dollar up 435 ticks at 84.86. That is testing that 84.90. The actual number is 84.94. Euro down 88 ticks at 128. Euro yen up another 25 at 108.94. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You got a flat market out here. Cash S&P. We have traded up to 2019. The swing point is 2011. We're 2013 right now. What I expect you're going to see here, this is going to be big volume out here today, flat out, folks. You get triple witching. We're already at 794 million on the NYSE. If we take a look at the Dow Industrials, you're at 1.7. So what does that set up? So if we stay with the S&Ps, this is what it sets up. You're going to have big volume come in. You're going to be at a high. That means in order to get to a lower price, you're going to have to test this high. That's the first part. Second part goes like this, is it an ABC structure on the way up? You know, meaning that because you got over the 211.17, if we go to the SPY and you do look at the SPY, what you have with the SPY is this, is that yesterday you got made at a high 201.85, today you got 201.89. Now it's going to be lighter volume on the test, and then we turn around and we put this on a weekly. Wow, this is a trip. Okay, so check this out. Man, this is intense. So on the weekly, it's definitely not an ABC up because what you're dealing with is 622 million shares. That's intense, man. This is where the correlation between a daily and a weekly is really important because the SPY is the only one that did that, by the way, folks, on the daily. On the weekly, guess what? It's not there. Not even close there either. Interesting. Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow Industrials, she's up 50 bucks. Has traded as high as 17,350 today. You're at 17,315. The strength inside the Dow Industrials out here today is that McDonald's. That's a dead cat bounce. That's up $1.10. Coca-Cola is up 47 cents. Verizon is up 53. And you get Walmart up 67. Taking points away from the Dow Industrials, you get Caterpillar down $1.74. Goldman is off 120. Intel is down 14 cents, and you get Pfizer off 12 cents. NASDAQ Composite. What do we have with the Composite? Composite, flat market. It's down 11 bucks. Really flat market, though. Composite got to a price point today of 46.10. The high is 46.10.14, so it got to a higher high. Basically gave it up on price. It's intriguing. These babies are at highs. There's no doubt about it. We take a look at the 3Qs. Not enough strength at the highs, but they're at highs. Take a look at the 3Qs. You're at 37 million right now. You've got to a price point of 100.56, and that 100.56, I believe, is it took out both last two highs, which are light volume, by the way. So we'll see where we close out here today. The 3Qs also, even on the weekly, won't have enough juice. It's 175 million at this particular point. Gold contract. We take a look at gold. What we have with gold is this. GCZ4. So they got gold down to 12.16 today, 12.14. 164,000 contracts. That's a lot of contracts. It's still not as many as it's going into. If you take a look at the GLD, we put the correlation up. You've done 8.9 million shares on the GLD. The weekly basis, this is what you're going into, folks. You're going into the last two swing lows that were established in the GLD. The characteristic is 63 million, and we're coming into that with 37 million. So bottom line is that you're into the bar where the higher risk is that you get to the bottom of that bar. The bottom of the first bar is 114.50, and you're at 117. No juice whatsoever, though, meaning push downdraft inside that gold market. Bonds, the ever-ready bond market, folks, just doesn't stop. So check it out. 10-year. The 10-year gets to 123.16, and the swing point on the 10-year, folks, is 123.12. Doesn't make it. Misses it by 4 ticks. Rejects that price, goes topside. So it's going to have to, do a lot more than it's done today, that's for sure, because we've come down from 126, 125.30 to be exact, but, 125.32 is 126. So, we'll see whether we can get any juice topside. 30-year bond, same setup in the 30-year. 30-year also did not get to its lowest swing point. And that lowest swing point on the 30-year, we made it down to 135.13. It's 134.31. So you can see that the 30-year continues to be stronger than the 10-year. Bottom line, both the 10-year and the 30-year want higher price. King dollar. We go take a look at King dollar out here. Would you have a King dollar? I'm going to do a continuous contract on it because what King dollar has done on a continual basis, we hit today 84.91. And what you're going to see is that this swing point that it has been going after is 84.96. And so I suspect King dollar is going to take a break. That's on the shorter term basis. On the longer term basis, folks, King dollar looks to me like it's off to the races. When you're coming into, well, first off, we've gone straight up, meaning it's gone straight since July 4th up to the swing point. When you do that, more than likely you're going to take a break. You're going to back off because it's 100% move or move. That's the first part. As you back off, however, what I expect you have here, because the retracement on a monthly basis, this is a longer-term deal, but on a monthly basis, the retracement, when we had made this last high in July of 2013, it was a very small retracement. So it looks like it's going to be an ABC structure on the way up. That ABC structure on the way up inside the dollar index is going to take you up to 90. It's going to be pretty intense. And as we trade this out, meaning going in the future, you get up to that level, and the real key is going to be, can it break that 90? Because if you break 90, and it's real possible that we do, the reason being is that we've been building cause since the low that was established in 2008. And, when I expect we're going to be breaking that 90 or challenging that 90 will more than likely be February, March, April of next year. You break that, you get over that, guess what? 120 is on the agenda. Because of the way we came down. If you remember, if you've been in the gold market or the dollar, or, in the market in 2002 going into 2004, that was a one-way trade all the way down. Then it started consolidating. Once you get over the consolidation, which is 92.50 to be exact, guess what? You go topside. Alibaba, no doubt all about it. They got this IPO off. The New York Stock Exchange is going to not only, they've upped their brand value and they've upped it dramatically, no doubt. Alibaba's trading at $91.90, up $23. The amazing part about it, so check this out. This is pretty intense. And you talk about, let your head spin around this one for a bit. So Yahoo right now is at $41. It's down $1 today. Well, check it out. On a capitalization, just that is saying that the business of Yahoo is worth $0 because their cash component just from owning Alibaba, folks, is $45.1 billion. And right now, Yahoo's market cap is only $40 billion. How's that? That is intense, folks. 877-927-6648. Dow Industrial's up 49. Nasdaq is down 10. S&P's right now are trading up 1. Stay right there. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We go over to Alibaba again, and we take a look at Alibaba. So Alibaba, folks, is trading out at 91.45. It got as high as 99 out here today, as low as 89, but it seems to be pretty steady at this 91 area. The amazing thing, you know, when you do put this together, though, is that, as I just said, is that you take the Asian asset alone of Yahoo, Alibaba, and that is worth more. If they cash that out right now, that is worth more than their whole market cap. It's 40, to be exact, at that $92 mark, it's $45.5 billion. And the market cap, oh, sorry, folks, excuse me. And the market cap on Yahoo right now is $40.8 billion. So, you know, the thing that is pretty cool, too, is that Yahoo has definitely got hit today, okay? You get volume down there, but guess what? It didn't break a swing point. Yahoo's on an ABC structure up to 48. You know, so that's the longer-term structure with Yahoo, which, well, it's a technical, on a technical sense, a fundamental sense. Fundamentally, you can see it. Technically, bottom line is it's there. You know, it took out the B point, took it out with volume, and it doesn't matter whether, if you're watching Tiger TV, I can put this on a daily, weekly, or a monthly. And it doesn't matter. The month's not even over. The B point on this is 41.72. Your volume is 450, and you've already done 800 million. And it's a straight line move, by the way, too. Your A point is 14. Your B point is up there at 41. Your C point is 32. Actually, on that one, hold it. Let me do this again. That's a bigger ABC. So let's say 15 bucks to 40 is 25. 32, 42, 52. Ooh, that's heavier than that. Okay, hold it. We got to really get our heads wrapped around this. So what I just did, I had this on the weekly before, but you put this on a monthly. Your A point is 14.59. Your C point, no, your B point is 41. Yeah. So it's, Yahoo is a long way to go. That is pretty amazing, no doubt about it. Let's take a look at some of the, Apple. Okay, so watch what you got. The amazing part is if, in fact, you know, Jack Ma, if you heard Jack Ma this morning, folks, on CNBC, it was a good interview. And I suspect that many folks are going to be watching Forrest Gump again. They asked him what his favorite hero is, and he said it was Forrest Gump. And I could agree with him like 8,000%. It was a good interview, and I suspect I'll definitely watch that. I like watching that film anyway. But he was talking about he's watched that film 10 times, and he actually watched it before he came to New York. And the reason he's watching it, they're asking him about how does it feel to go from 15 years from being broke to the richest man in China. And the bottom line is he says, Forrest Gump, I am who I am. You know, so it's pretty cool. Apple. So Apple, once again this week, looks like it's going to close over its swing point. Have lighter volume once again, but it's, hey, guess what? It's hanging at that swing point. The swing point we're talking about is 100.72. Apple's at 101.84. And, you know, the more that, so watch how this also works, folks. The longer that you stay at the top of the swing point, it does have lighter volume, but the higher the probability goes that, guess what? It'll get higher. You know, it'll fail, you know, because it has no volume and light volume. But the longer that it does stay up here, and thus far, this would be the 5th week that it can't get higher, but it's the 5th week that is also not backing away from the highs. The iPhone 6 went on sale today. The lines are huge. You know, we'll see how the rest of this shakes out. Some of the Dow stocks out here. Let's go and take a look at Caterpillar. So Caterpillar's getting hit. Caterpillar, yeah, she's got a high volume low anyway. So Caterpillar down $1.77. And she wants to go after this $99 level. Excuse me. ExxonMobil is up 66 cents. You have DuPont flat. Big Blue is up 33 cents. You get Johnson & Johnson up 73 cents. Let's go take a look at those financials, because you had the financials moving yesterday, but yet they can't get going today. JP Morgan is down 11. You have Goldman down 97. If we start with JP Morgan, JPM, we take a look at JP Morgan on the daily and on the weekly. We put this up on a weekly basis, and what you're going to see is that the high that it went after this week is $61.48, 111 million shares, and this is going to be interesting. Yeah, this would be a failure for JP Morgan at that high. Dramatically lighter volume. Someone is unloading JP Morgan, that's for sure. We've done 66 million shares. Your characteristic even up at that point is 111 million, which in fact is light. So we'll see where that shakes out. The American Express, we go take a look at American Express. American Express down 16 cents. American Express is going into its downdraft, and this also looks like it's going to be a failure. It's going into 7.5 5 million shares with 4 million today and failing. That's on your daily. On the weekly, what you have is that 23 million shares versus 33 million. Big Blue. Let's go to Big Blue and we take a look at Big Blue. Big Blue still can't handle higher price. You know, had some juice into it today. Got over the swing point of 194.13. We went to 195, but that's still coming into the downdraft. Many of these, because they came down so hard, folks, okay, they're struggling to get through the supply line. And in Big Blue's case, you know, that supply line is hanging right at these highs. So evidently, there's a lot of folks that basically bought up at those highs. Now, let's go over to the silver market because the correlation between the metals, you know, gold was down, but silver, folks, okay, just not only went south, but went south with some monster conviction. You know, silver was down 63 cents. They took it south, and they took it south in a big way. Now, silver is always more volatile than gold, but this is pretty intense. So if we go back, SLV, I'm going to go back, and we're going to look at the same setups that the GLD has, so you can see inside that correlation of what we're talking about. And what you do have is this, is that the low that was established in June of 2013, well, the SLV just not only blew it away, it blew it away, and we have an expansion of volume. You know, now, it's going to be lighter volume than on the 13th, but it's not lighter volume than 44 million. Okay, so we're at 41 million versus 44. Now, this is really intriguing because it's like, okay, what is the difference? Now, the difference is dramatic of the silver selling versus the gold selling. And what is the implication? So let's bring this back. We'll put this on a much larger basis. First, I'll take it 5 years, and then I'm going to put this on a monthly so we can get more clarity on a 10-year. So when we take this on a 10-year basis, what we have is that it broke 1775. This is going to be a tough one, man. This is... Yeah, this 1775, and we're at 1717 was really a line in the sand. That sets up like a 1548, you know. And as our man Andy Hecht is saying in the den, silver's more illiquid, so they sell that first. It's a beautiful thing. Sad but true. Dow Industrials up 36, NASDAQ down 14, S&P's a flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials right now up 43. Nasdaq's down 13. You get the S&P's flat. The small caps, folks, just can't handle it. And this is pretty intense, actually, looking at it, because the Russell 2000, we're at 1146. And it's like, okay, why can't the Russell, get up and go? The Russell, the high in the Russell, by the way, folks, was the March of 2007. I'm sorry, March of 2000, the week of March 7th, 2007. We are at the same price point that we were in December of 2013. It has all high volume lows at the 1,062 mark, and that benchmark is still at February 5th level, which is pretty amazing. The Russell 2000 is the only equity indice today that is moving lower with volume, and it's certainly going after a B point, and it looks like it's going to be an ABC structure on the way down. It's possible that what you do have out here is that with commodities getting killed, silver's off 3.5%. You got wheat off 2%. Oil is still lower out here. There's a lot of commodity equities that are in the small cap arena. There's no doubt about that. So we'll see where that shakes out by the end of the day, but it looks like it's going to be an ABC structure on the way down. Inside the NDX 100, what you have right now, that's a flat market. Putting strength into it is Vertex Pharmaceutical. That's up 7%, 6%. That's up $7.18. We take a look at Vertex Pharmaceutical. That right now is, it's basically over its swing high. The swing high that it has is 98.71. Not enough volume. I mean, this is an equity that had gapped away from $64 in June and, come back, never filled the full gap. What it did is this. It got down to a price point of 85. If we go look at the IBB, the IBB is still at highs. We're at 275, and the reason you look at the IBB when you're looking at the NASDAQ is that the NASDAQ, inside that IBB, there's a large weighting structure that basically had taken the NASDAQ south very quickly last February, and it was GILD, Gilead. Right now, Gilead is hanging at its highs up here. I suspect once you've hung up here long enough that it's going to test these highs once again. So 110.64 is game to get tested. You do have that high volume low, though, at 997. But bottom line is that let's go to Celgene. Take a look at Celgene. Celgene up here, she's at the highs, too. So the IBB, until the IBB basically falls apart, that NASDAQ, it's drifting, it's flat, but the bottom line is that it's going to take that to fall apart. And this is how powerful Apple is inside it. There's no doubt about it. Apple, at this point, Apple doesn't look like it's going to fall apart. And it always has to, the amazing thing about Apple, folks, is that Apple's just going to be down 1 point. But bottom line is that it has held these levels the last few times. We're going to take a look at the TLT. And the reason for the TLT, you take a look at the, yep, she's moving with strength again. This is pretty amazing. So the TLT had come down from its highs. Now, the TLT is the 20-plus bond fund. That's what it is. 20-plus means that anything that's inside the fund, the bonds have to be 20-plus years before they expire. It come down from 119. You got, if we put this on a weekly, what you're going to see the TLC is moving with force again today. We came down, never broke the swing. This is amazing, too. So on a weekly basis, you come down to 112.73. Rejected that price. We're going to run in about 44 million shares, and you're coming into 44 million shares. You're coming into 44 million shares. So it's, thus far, we've done 41. We'll see whether you do 3 more. I guess you're not going to do 3 more million shares in 20 minutes. But bottom line is that the TLT, once again, is going to run up to the highs that we're talking about here, 119. And, we'll see whether it's an ABC structure on the way up. We take this, that was on the weekly. You take this on a monthly basis, and on a monthly basis, now this is the other differential. On a monthly basis, the most it can do at this particular point is go up to that 122. 132, rather. And the reason being is that we went in 2012 from 132 down to 101. That was way too much of a retracement. It was coming back with lighter volume, but that's way too much of a retracement to get up and over that on one swing, meaning that it's going to need more energy. Well, it would have the energy to get up there, but that extension would be dramatic. Let's go take a look at the XAU, the HUI. So if we take a look at the XAU first, XAU making its way into the swing point down there from the 528. And that's on the daily. We put this on a weekly. And what you have set up is that this is a good one. This is interesting. So we're at 86.91. And you break. You get into 84, that leaves 79, What is intriguing, just if I go back to the gold and silver for a second, if you want to see, and we happen to own this, folks, but this is impressive. If you go back to Great Panther, you can see that silver's getting croaked, but yet Great Panther had a huge sign of strength on Tuesday. went topside with 1 million shares, and it's only down 6 cents. Now, this is silver stock. It's like, okay, what's that all about? Well, you know, we'll find out what it's all about. We go over to PAAS. We take a look at PAAS. This is coming into a swing low. The swing low has 1.5 million shares. Right now, you're doing 1.4. That's a bummer, okay? That means that, guess what? You can get to lower price, and so that's saying that the PAAS more than likely will get to lower price. We take a look at Heckler. Heckler out here today, she broke her swing low, and she broke it with volume. Heckler's 7.5 million, broke the 271. That's 5 million. That's saying that that is also getting down to lower price. And the swing low on this would be 265. Man, this is gonna set up a pretty wild week next week, no doubt. The SLW, which is Silver Wheaton. Now, Silver Wheaton is a silver broker. They basically broker silver. The low is $19. The high is 27. And if you want to see, this is interesting. Versus a royalty company, you know, Royal Gold, you know, Franco-Nevada, they basically set up as royalties. This is close, but that's not the way they work. But they only have 30 employees, and they do take in $683 million, which is pretty cool, right? Now, this little baby on a weekly basis is also coming in with a lot of volume. Now, the low on this was 45 million, and you've done 21. So that is much better than PAAS. So this is coming in that, yes, it can go to $20. We're at $21.42 right now, but it's coming in how it should come in, meaning you're coming in with lighter volume, and we'll see whether we get the rejection of lower price. Let's go over to Rango Resources, which is GOLD. Rango, check out its low today. Have an expansion of volume, 976,000 shares. We take a look at this, and you put this on a monthly basis, and what you have is that pretty intense. This is saying that, guess what? You can go test you can go test $60. It's like, you know, what's happening with Rango Resources. Now, what's possible in Rango's case, and this is, so picture this. When we go back to 2001, the strongest stocks, from 2001 to about 2003 or 4, it was Gold Corp. Gold Corp was the name of the game. Strongest stock there was. When you had the correction, it turned into an Eagle. An Eagle was the next strongest stock for 3 or 4 years. Since 2008, it's been Rango Resources. The real question at this point is that, is there another equity that's going to overtake that? The only thing I can figure inside the, and this is something that you have to absolutely consider when you're dealing with, you know, West Africa right now, and that's where they deal with, okay, is Ebola. That Ebola, folks, is a heavy deal for all of us across the world, not just in West Africa, but that's serious business. And you know, it's like crazy. Is that what the chart is picking up here? It's, you know, so, you know, we'll see where that shakes out. It's pulling back with lighter volume. You can get a test of 60.17, but bottom line is that it wants to run back there. There's no doubt about it. This is just coming across, when we talk about West Africa, so this came across this afternoon. The Ebola outbreak in West Africa could spread to hundreds of thousands more people by the end of January, according to an estimate under development by the U.S. Center for Disease Control and Prevention that puts one worst scenario at 550,000 or more of the infections. It's a shame that, you know, we basically, the wait was this long in order to basically tackle this disaster, folks. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back. Dow Industrials up 51. NASDAQ down 8. S&Ps are up $1.50. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Right now, you get the Dow Industrials up 44, Nasdaq is down 8, S&Ps are up $1.50, and it's the small caps that basically are down a bit. You get the Russell down 13. Inside the NDX 100, Apple's going to close over that number. So bottom line is that the Apple can go higher, and in fact, if we take a look at the NDX 100 through the 3 Qs for a second, the 3 Qs right now are up 5 pennies. And on a weekly basis, because we're going to have big volume up here, folks, on a weekly basis, we'll see whether it can close over the highs. The highs are 100.46. And right now we've done, we're at 100.11. The SPY, we take a look at the SPY, what we have with the SPY. SPY is at 200.00. And this one here on a weekly basis looks like it's 200.58. So the SPY is not going to make it. The IWM is the least attractive, that's for sure. The IWM basically has got into lower price and continues to get into lower price. Dow Industrials, we go to the Dow, we actually use the DIA. If you're going to the Dow, DIA, the ETF structure inside this, there she is. Dow Industrials, all right, the DIA is at 172.17, 71 rather, and it's not an ABC up because you go, well, actually, hold it, this is sick, 29 million. Yeah, this is going to be interesting, man. You can almost make the case. This is going to be a tough one because you can make the case that 159. Let me put this on a monthly for a second. No, I can't make the case. Okay. So this is important to do, folks. If you're putting on these daily, weeklies, monthlies, put them on the monthlies. It's not even close. Yeah, the Dow would need 165 million, and thus far you're at 68 million. So this is going to be tricky, meaning in the context of, okay, what are the price projections and how can you get, and this is why. The S&P had taken, well, let's do it. The SPY had taken out a swing point Wednesday with volume. That's on the daily. It tested it yesterday, tested it today, basically can't handle price. That's on the daily. The weekly, the monthly, it's not even close. It just doesn't work. Well, here, let's put it on the weekly first. We'll do it on a 2-year weekly. On a 2-year weekly, what you have is that we're at 530, and it would need 627. That's on the weekly. So it's not there. On the monthly, it just doesn't. On the monthly, thus far, you have a higher high, and we'll see whether they can get 1.8 billion. We had 1.8 billion last month, which is short volume. Bottom line, we'll see whether they can get it. So what has happened there is that you still have higher price, you have less people in the marketplace, and you have them pushing out and, in fact, paying higher price. The small caps basically want to go south. King Dollar, the King Dollar move. What's going to be really intriguing here with King Dollar is that is King Dollar going to take a rest at this particular point, or will King Dollar just go after the B point, get some juice, and go nonstop? So we'll see. Let's go over to the oil market. We take a look at oil CLV FOA. Inside the oil market, what we have, oil is at 92.48, and at 92.48, well, let me make sure get the right contract here, because oil changes every month, folks. Probably CLV, yeah, we do. Okay, so you get there's short contracts out here today. So today we've only done 59,000 contracts. It's going to need a lot more contracts than that, but it has a high volume low at 90.43. You know, oil set up to go to 85 bucks. That certainly is going to be dynamite for all of us in driving. For you folks in the Northeast and from the Midwest, that's going to be great when we're talking bills, oil bills. You have gasoline today up $1.60. $1.60, I mean a penny and a half. That one there, we're up with 29,000 contracts. Let's see what that's doing. and she's short volume. So gasoline still wants to get down to this 225 level on a wholesale basis. That would put unleaded gasoline, I suspect, right across the country under $3. And that is big money. The real question is going to be how much of this is going to be spent. You know, I was looking at the different sections of the country today, the different price points in real estate, and the different pay structures. You can see that the correlation is there's a nice chart today in the Wall Street Journal. The correlation about San Francisco, Washington D.C., Boston, real estate wise, how much it's worth, median pay, how much it's worth. Huge median pay numbers, folks. There's no doubt about it. Now here's where the disconnect comes in, which is pretty amazing. We have the real estate fund, of course, in Florida. The disconnect comes in as to paying, whether it's $600,000, $700,000, $800,000 for a unit, as to what you get for the rent of that unit. And it's totally whacked out. So it's going to be interesting to see. And this is where, you know, the last drop in real estate across the country and across the world was right straight across literally the country and the world, because it was a liquidity event. I've seen two before that, though. And the two before that, one of them was in Boston, L.A., all of that, had to do with the regional portion of it. And that regional portion of it had to do with expansion in price versus expansion in the ability to pay the mortgages in it. And, you know, I start looking at that. I says, oh, this is interesting what's happening. Specifically, you know, where we are, you can pay $200,000, and guess what? Your cash flow is going to be over 25 grand, whatever, you know, 22 to 25. You can pay $500,000 in Boston, and your cash flow is going to be about the same thing. And that's not enough to sustain higher price on a continual basis, because that's the merry-go-round, you know. And what happens to the merry-go-round, of course, is that you have to sell it to someone else versus supporting properties on a cash flow basis and have cash left over at the end because the fare is still there. And so we have that across the country right now, which is pretty wild. The last time that we'll see where this shakes out, you know. But it's certainly intriguing looking at that and watching that, because as you step into that market, what you should absolutely make sure of, folks, is that if you're buying units, make sure the rent can pay for the units, and make sure that you have another, you know, 20, 25% left over inside your pocket. You stay right there. I mean, Mr. Dave White's going to be coming up with us. We're going to be growling and prowling. Of course, I'm sure we're going to be talking Alibaba. Dow Industrials right now up 23, Nasdaq down 13, S&Ps are off $2.50. You stay right there, folks. Come right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. I got our technology expert with us right here at TFNN. I'm Mr. Dave White. And it's a TGIF, and we got Alibaba, baby.
We got it.
We got Alibaba. Jack Ma, man, did it.
Near $200 billion.
Jack Ma sold the high again, man. Yeah. It's pretty amazing.
He's good.
He's great. Did you hear the interview with him?
Just parts of it. I heard parts at the news during the top of the hour on a local station about him and...
Forrest Gump.
Yeah.
That was great. It was great. If you haven't heard it, folks, his hero is Forrest Gump. And yeah, I thought it was great. I love that movie, man. I mean, seriously, I can absolutely understand why this guy. You know, this guy. We'll find out whether he sold the high this time. But this guy sold the high in Hong Kong, folks. Alibaba went public in Hong Kong in 2007. Went higher, and then he bought the whole thing back. And people sold it to him. This is amazing. You know what I mean? I guess you could buy so much back, and then you just rack the rest of it in. Market-wise, let's take a look at it out here. We had the Dow Industrials up 14, Nasdaq down 13, S&P's off 3.5, gold contract down $9.90, traded at $1,217 an ounce. Silver down 67 cents. Silver got smacked. $17.85 an ounce. Platinum down 10 at 1,336. Copper flat at 308 a pound. Light sweet crude off 43 cents at $92.64 a barrel. Bonds, you had the 10-year up 10 ticks, 30-year up 1 full point. That's after rejecting lower price with lighter volume. Neither one of them, folks, got to their lowest swing point. Bonds want higher price, lower yield. King dollar, she's on the tear. Up 430 ticks, testing out those highs again. We're at 84.86. The swing high that's going after, folks, is 84.94. Euro down 88 at 128.35. The yen up 25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're at 2013, and 2013, folks, get you a high. That's the bottom line. You go high, you can go higher. Volume, we have option expiration. Doesn't matter, though. You got 1.6 billion shares. So we get some juice behind the move. That being said, however, if you do go over the SPY, because the divergence is pretty incredible. So what you have with the SPY is this. The SPY is at 200.70. The SPY had monster volume come in it on Wednesday. You did what? Well, you had monster at 151 million. It takes out the swing point of 201.58. Bottom line, it's like, okay, is that an ABC structure on the way up? Well, as soon as you go into the weeklies or the monthlies, it is absolutely not. On the weeklies, what you have is that the week, well, let's see. The weekly, yeah, we did 558. No, you need 620. On the monthlies, it's even more anemic. We haven't finished a month here, of course, and that can change. But on the monthlies thus far, you can see you're up here thus far at 1.2 billion, and you'd need about 2.5 billion, something like that, in order to get and stay at a higher price. Dow Industrials. You take a look at the Dow Industrials. What you have with the Dow is this. Dow Industrials closed up 13. That's on the daily. We take this and we put this on the weekly, and guess what? You still closed over the highs. So the bottom line, on the dailies, it looks like, yeah, I can pull back. On the weeklies, it's like, hey, you're at a higher high. That means you can go higher. NASDAQ Composite. What you have with the composite? Composite closed flat, well, down 13 bucks, but, you know, bottom line, failed at the high out here. Juice-wise, you did 2.8 billion. And what you can expect, okay, on an option expiration. Now, you know, we've been watching Apple for a long period of time, meaning 5 weeks, closing over the 100.72 each and every time. We're at 100.96, and, you know, this is option expiration, folks, but someone sold this into the close in a big way. Apple was trading at 15.40. I was at 101.49, and then they just unloaded on Apple. 10 million shares. In fact, so check this out. Into the close, you did 10 million shares. You only did 63 million all day. But guess what? It's still not at the 100.72, and that would be a failure. And so thus far, this is the 5th week that Apple continues to stay up at this particular price. What I expect you're going to see, it's just going to be a matter of when, not if Apple gets underneath this 100.72, particularly how it traded into the close out here today. Gold market, okay, we take a look at gold, and we have divergence here also between gold and silver. They absolutely smoke silver. Gold got to a price point of 12.14, which is big numbers. The low yesterday was 12.16. We closed at 12.17. That correlation, however, is going into the last 2 big swing lows that we have in gold. I put up the GLD so you can see that correlation. Your first swing low is 114. You're at 117, which was in June of 2013, and then it tested that in December of 2013. So you're still in decent shape as you go into those swing points. Silver, not the same thing, not even close either. Silver, they absolutely took apart. And silver is always more volatile than gold, no doubt, but this is about as intense as you can get. 67 cents for something that trades at 17 bucks.
Did you get volume for contracts already today?
The volume, yeah, is 62,000, which is a monster.
Okay.
That's a big number, you know. If we go, and what you have, and here's where you have harmony. If you go over to the SLV, where in the GLD didn't go down with volume on the daily or the weekly, the SLV went. They basically got everyone out of this market. You know, it was down with 20 million shares.
Yeah.
That's on the daily. We put this on the weekly. Well, here, I'll put this on the weekly. Let me put this on the weekly. So I put this on the weekly, and what you have on the weekly, you took out the swing point, and we did 45 million shares. The swing was 1775, and that was 91 million, but it blew it away. And our man Andy Heck, he was coming over to me earlier, saying, you know, he doesn't like gold because of what silver was doing.
Right.
There's a valid reason there. There's no doubt about it. Bonds, they rejected lower price, had lighter volume, want to go topside. King dollar, bottom line, king dollar is king of the whole ball of wax out here, right across the world right now, folks. King dollar, up 460 ticks out here, closed at a tie. So king dollar is going to spike higher, you know, so it's going to be pretty wild. And Alibaba does an IPO. Hey, what do you think? This is pretty wild, man. I mean, so check this out, folks. Alibaba right now is at $93.89. And if you do go over to Yahoo, right? So check this out. Yahoo has a market cap right now, 40.70. The asset, just the asset of what Yahoo owns in Alibaba, and this wasn't at the closing price, this was before the closing price, is $45 billion. So
it's been that way. They priced Yahoo at $2 to $4 billion of market cap, minus what Alibaba has been for the last year.
Yeah,
and that's not good for the future Yahoo. But guess what? They were able to hold a lot more Alibaba shares. There were a lot of people thought that they were going to have to cough those shares up, and then it would really be problems because it would really highlight the fact that there's not much happening at Yahoo.
I guess so. I guess you know, when you look at it, I understand that argument, but when you look at Yahoo, that's like saying that you have a cash flow of $4.3 billion that's not worth anything.
It's not.
Why not?
Because everybody's going to mobile. At least, let me put it, the argument from the street would be everybody's going to mobile. They have a very small penetration in mobile. They don't have a lot of apps on mobile that get a lot of play compared to things like Twitter and Facebook. And everybody's seeing the huge volume over there, and they're not seeing anybody saying, hey, you've got to get that Yahoo app because of X, or it does X or something, right? And that's, I don't think a lot of people have a lot of long-term faith unless they get some kind of mobile app advertising model really working.
And they're going to have to. Because it's so intriguing, isn't it, though? I mean, it really is. You know, when you think that the one asset is worth more than the whole company.
They used to have a great search engine.
Yeah.
Google took that.
Yeah, no doubt.
They've got probably the finest financial information for people like us. I use it a lot.
Right.
But not a lot of other people
and that's
outside.
A niche market.
Yeah,
there's no doubt. There's no doubt. Dave White, Tom O'Brien, you stay right there, folks. We're going to come right back. Dow finish up 13. Nasdaq down 13. S&P's off $1.50. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. And, folks, as you come over to our website at TFNN, you're going to see right on the front page, we're doing a $10,000 cash giveaway trading contest. It's a virtual trading contest. The contest, you can sign up for it until this coming Thursday at noontime. The contest is going to start the following Sunday, a week from this Sunday. It's going to go for a full week. Check it out on the front page of TFNN. As you sign up for the contest, and it's free, as you sign up for the contest, you'll also get an entry into the Tiger's Den, which is a trading room open 24 hours a day. And then on a week from last night, I'm going to be doing a workshop. That workshop's going to be free also. We got our man, Mr. Dave White here. He has an outstanding newsletter each and every week. You can test drive that newsletter by coming over to our website at TFNN. Go into newsletters, go under investment newsletters. You'll see the Tech Insider right there. And, of course, it's been a big tech week between Alibaba and Apple 6 coming out today. And we're going to start with Alibaba. He has a slide up if you're driving in your car, and what it says variable interest entity, a VIE, is a term used by the United States Financial Accounting Board. So tell us about this.
I just wanted everybody to know, we've talked about it in the past, but maybe we got some new viewers.
Sure.
You are not buying shares in Alibaba.
Right.
If you buy Alibaba, you are buying a variable interest entity. And what that means is you have 0 voting rights. This is somewhat like the Facebook deal where you didn't have any voting rights. But in this case, you are buying shares in a company that has the promise of profits from Alibaba in China.
And that's how all the China IPOs are, right?
You can't legally own any company in China outside of China. Only Chinese can own Chinese companies.
Now, you know what's interesting about this, folks, is that the way that this is set up, okay, is that, bottom line, the SEC has to okay this deal, right? And Hong Kong itself, so check this out, Hong Kong wouldn't okay the deal.
Yep.
That's what's pretty amazing about this first deal, right? And what was interesting out here today? So I'm just going to switch gears for 1 second because I saw this morning that the head of the Chamber of Commerce was on, the United States Chamber of Commerce, right? And it was so cool what he said because Joe Kernan, good old Joe, right? And if you listen to CNBC, good old Joe, folks, has been interviewing for Fox for a long time now, and one of these days they're going to pick him up, I think. But he was expecting that the head of the chamber, and this guy's a very conservative guy, but I found it so refreshing because they were talking about inversions, right? Mm-hmm. And so he asked him about the inversions and, what he thought about them. And the guy came back to him, right? You know what the guy said to him? It was amazing. He says, listen, he says, you're just talking about the banks. He says, the banks, our banks, Goldman, Morgan Stanley, Citigroup, okay, the banks are the ones going to our companies saying, hey, you get the inversion going, okay? And it was refreshing, folks, because the fact of the matter is, and that's what this guy was saying, and he is for business. That's what the chamber does on a continual basis. And it was dynamite because if we had more of that, meaning people telling the truth,
yeah.
Okay, that, hey, listen, our problem, is political but financial, the same deal. And then he says, and if we change the law, because he's for less taxes, don't get that. That's a separate issue. But when he's explaining, he says, if you change that part of the law, he says, guess what Goldman's going to do? He says, they're going to go to Switzerland and then talk about the other side of it. So our larger problem is the banks.
Yeah.
It was amazing. But let's go back to, so with Alibaba's case, and it's like, okay, why does our SEC say we want to do it? And, yeah, and one of our targets says it's really the truth. If you want to peeve people off, tell them the truth.
Yeah.
I thought I just loved hearing what he had to say, though, because I think that everyone would have more clarity, but everyone would make more money.
I would want to let everybody know that they are not buying shares in Alibaba if they buy BABA.
Yeah, right. No,
there is a distinction.
No, it's
and
definitely.
We've seen it in things like the ETNs where you came back and find out that they're worth nothing the next day,
yeah.
right? And
well, one of the things at Alibaba, folks, is that they have 45% gross margins, and folks are really trying to figure out how do you have a 45% gross margin. And
that's because they really don't sell anything.
They're an advertising company, basically, right?
Yeah, they are the middleman,
yeah.
And what they do is they say, you send this thing and we get 50 cents.
Right.
Well, if the thing was $50,
right.
But they still get 50 cents, to them, whatever the cost of transaction is whatever bits they sent back and forth, right?
I got it.
How much their computers cost.
That's why
their gross margins.
That's why it's 45 cents. Yeah.
Right. Their margins.
That's pretty cool, man.
It is, and it is a interesting business. The question is just at the end of the day, are those guys going to let any cash leave China?
Oh, sure they are.
They're going to let some, but, there's a lot of... I tell you what, he's probably a great CEO for one reason. He figured out whose palms to grease in China.
Yeah, no, I'd agree. And what happened, folks, there's a part of the Alibaba story, which is the Alipay, where a lot of people got taken to the cleaners, including Yahoo. And they asked him about that question this morning, and he says, well, he didn't want to talk about it. He says, but that will come out. And I suspect that, the only way that you can get lodged in China is that, the shares had to go to the right people. Yeah. So they've let them run. The real question is, are they going to... My take is that they will continue to let them run. And my take is that Alibaba is going to be a huge competitor to everyone in the United States because what it seems to be is that you're going to take, and he's going to take, a huge amount of small businesses here, and on a platform, and small businesses will also be shipping things out. So, you know,
the one good thing that I would say on the plus side of Alibaba is most of these people are not in the 90-day lockup or 180-day lockup. Most of the people that are involved are in a 1-year lockup. So my guess is this stock's going to trade sideways for probably a year before those shares come out. Now, when those shares come out, you're going to have a lot of people that are going to be able to sell for the first time, but we're a year away from that.
Yeah, and I think after hearing Jack Ma today, I mean, how can you can't help but like the guy.
Yeah,
he loves Forrest Gump. It's beautiful. I love Forrest Gump. Tear it down. Let's see. We're looking at the Tech Insider, and Dave White has just tore down the Apple i6. Is that what it is?
The i6 Plus.
Okay.
But we looked at all the. There's a great site that I go back and look at when these things come out.
Yes.
And as soon as they can get one of the shipping models, so they know nothing's changed, they rip the thing apart and then they look at, and I actually got my newsletter out real early this morning because I wanted everybody to know what's going to move because it's in there. And the interesting part was there's about 12 different companies. We're showing Qualcomm, Skyworks, and Avago, which are kind of the usual suspects.
Okay.
But there are a bunch of others, a couple of different ones in there that no one really knew about. And you can get my newsletter at a trial if you want to get the whole list of all of them today.
And so you go to newsletters, you go to investment newsletters, the Tech Insider, and we say tear it down, folks. It's torn down, so it has the companies that are supplying the iPhone 6. That's what it's all about. Dave White, Tom O'Brien, you stay right there, folks. We're going to be coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, every trading day, we have live content from 8 o'clock in the morning to 6 o'clock in the evening. You can get it right on your cell phone. All you do is you put in your browser tfnn.mobi for Mobi. That is get your audio. You want the Tiger TV, you want to basically get the video plus the audio, just go to tfnn.com. You'll see the TV right on the right-hand side. Hit that TV, you get the audio plus the video. We're looking at how the Apple iPhone is teared down. And if you want to get the full list, folks, right now in front of you, you have 3. Dave has the full list in his newsletter today. You can test drive that absolutely free. Just go to TFNN, go to newsletters, investments newsletters, and the Tech Insider. So these are the 3 larger ones, not larger ones that everyone knows about. Right?
Yeah,
usual suspects.
Usual suspects. Now, the thing that we saw at the very end of the day, you were showing me, is just how Apple sold off at the end of the day.
Right.
And the one thing that disturbed me was there was one that was out of the blue, and it did well today. But almost all the rest of these were down,
they were down
significantly.
Yeah, they were.
And that, you've got to scratch your head along with Apple selling off at the end of the day. Maybe option related, maybe not. I would say that if all the other stocks did well and Apple sold off at the end, maybe I could just write it off to options. But when I called the highs, or really questioned the highs at Apple at 700, we spent that day in the show, which it was like September 29th.
Yes.
I remember it was that Friday, because I did the special report and said, all of these suppliers are looking horrible.
Yeah.
And that was at the original first 700 high. You want to watch this. If you want to see where Apple's going to go, I'm thinking you want to be watching those suppliers.
Which totally makes sense.
And because it worked before.
Well, and also what ends up happening, folks, is that not that it's illegal, but when you have a bunch of companies, and it looks like it's about 12 companies that you have listed there, right? When you have that many companies, folks, picture the amount of people that work for those companies. the amount of people that know, are we getting more orders or less orders? And it's just a real simple,
yeah.
you know, and clean explanation.
When
It's
everybody
like,
at that company's buying a new car, you know something's going on.
That's right. And what happens, you know, when you get that momentum going, that momentum shifts, everyone knows it very quickly. I mean, because you're always looking for the next contract. Anyone is.
And two, everybody looks at the parking lots. I used to look at this. There was a fiber optic company right up here at McMullen Booth in East Bay. I don't know if you remember, about 2000, went to the moon. But there was a parking lot, and I drive by the parking lot every few days.
That's pretty cool.
And I started seeing the parking lot getting smaller and smaller and smaller with cars. And, you know, the dot-com bust anyway.
Sure.
But I sorted that company because I saw half the cars in the parking lot. You know they're not kicking out what they used to, right?
No doubt.
So people do know for a variety of reasons, not just the reason they're saying.
That's right. No doubt. Next, we're looking at $100 tablets. Amazon has new Kindle Fire tablets. And Microsoft, you think Microsoft's coming out with $100 tablets?
They've already announced it.
Wow.
So there's going to be a flood
So
of
this
these.
Christmas, everyone's going to have a tablet.
Well, if they haven't had it already.
If they don't have a phone.
Right. But the tablet, they've updated it. The standard Kindle that was $170 last year is going to be $100 now. And it's got a better display, faster processor, and a little bit more memory. So there is pretty much, these guys are racing to the bottom. And, of course, Kindle doesn't really care, or at least Amazon this week, and Bezos said that they really don't care about the price. They make the money when they order it, and they figured out how much money they make by getting this into the hands of people.
These guys
and they
are so smart. It blows my mind. I mean, it really is.
I don't know if they're making that much money. I think there's a little bit of... we're better off making sure that our other customers don't get the orders.
Yeah, no, it's an ordering device. No, but that's what I mean.
I don't know if they break even at the end of the day or come close or make just a little money. But I think they've made the decision that we're better off, even if we don't make any money, even if we just break even, that maybe somebody else like eBay doesn't get the business.
Listen to this. Oh, you know what I have, folks? I'm going to get this at the next break. In fact, I got Advertising Age today, so we get Advertising Age anyway. But this will blow your mind. The largest advertiser on Google is Amazon. And this is search words and the whole ball. Isn't that amazing? Yeah. And they have the number to say, okay, these numbers are public. And I'm not even talking, this is just on, this is not the mobile app. This is just on the search. And it's intriguing. I have the top 25. It's intriguing reading it, man. It's like, you got to be kidding me. The brave new DNA world. You know, you had been talking about this before, 23andMe, right?
23andMe, they were a company that was getting ready to go public. The startup CEO of this company is the now ex-wife of Sergey Brin, the CEO, one of the big wigs at Google, right?
Yes.
And
she started 23andMe?
Yes.
Okay, cool.
And so she's had this out here for about 4 or 5 years.
Yeah.
They got in a big brouhaha on telling whether or not your DNA said that you were more likely to get specific diseases, right?
Okay.
So the FDA said that you haven't provided us with the statistical background on this, so you can't say it, right? So they've kind of gone into hibernation. Well, didn't hear much about them. They've quietly in the background started building up yet another business of just telling you where you came from, everything that you can find out from your DNA.
Okay.
But now that they have a bunch of people sending in data, they just started telling people without really asking them, you know, you got a brother over here, you got a son from a previous marriage. They didn't say that. They just said, there's somebody here in Alabama that is related to you. We can tell from your DNA.
Really?
And they didn't ask the people whether they wanted anybody to know about it. So what's popping up are people that have been adopted.
Okay.
Previous marriages where that no one ever told anybody about.
Okay.
There's been some divorces now filed for in the last couple of months. So they're changing their policy. And this is going to say you're going to be able to opt out of finding out about anybody new or finding out or telling anybody if you don't want to on the other side. So you're going to have... to me, it sounded like something they should have done to begin with.
Oh, for sure. Yeah, as Terry says, not too smart. That's a brave new world, though. That's pretty intense.
It is going to be...
pretty cool, actually. Hey, it's cool in that if you want to find that out.
Well, here's another thing. Of course, they're keeping records now.
Yeah.
what's to stop the government and just come in there and say, hey, I want to access all these. I'm looking for somebody. Maybe we're going to cross your DNA.
They're going to. Listen,
you know they are.
There's just like the email, folks. If you email something, you email anything, you text anything, make sure you know that the government can get it, will get it, all of the above. I mean, if
I was going to do this, I'd use a phony name and have it sent to an address at a friend of mine's house under another name with probably Canadian money, so they couldn't follow.
And then the NSA shows up at his house. or basically someone else shows up at the house saying, you know, you got 5 kids here.
Yeah. Now you're going to make me have nightmares, Tom.
Oh, my God.
Anyway.
Okay, so Netflix, I think we're speaking
Deutschlander.
Okay. So
you didn't take German in high school, apparently. I did.
You know, it's so funny. I've had a German Shepherd since I've been 14, but, well, actually, I train them in German, but that's all I know.
All I really remember
commands.
from 2 years of high school German is all the ways to call a young lady pretty.
Really?
Yes. There are a bunch. I memorized all those.
So Netflix is going to Germany.
They are opening up in Germany. They actually started yesterday, and we've talked about what's going to happen with Netflix and their books from expanding. And you had kind of an alternate theory than I did, which is that because maybe Germany's a smaller country, they won't have to pay as much for German movies because they're a smaller market to go to. And I really hadn't thought too much about that. I was more thinking about the infrastructure of putting up and dealing with another government, with paying off the local cities, all the other things you have to do when you go local, which is all about Netflix these days.
Yes.
And for those people that get to Tech Insider, I've written basically how they're going to do it here in the United States. I don't know, and they have not said how it's going to work over in Germany as far as the infrastructure, how much money do they have to pay. You know, here they have to pay off Verizon, Time Warner, Comcast, right? We know that they're paying them off to get it streamed correctly. How is that going to work when the Internet, for the most part in Europe, is government-owned, right? So there's a lot of things that we don't quite know and how they're going to happen. But they've talked about how much money it was going to cost to expand, and they are doing that. And in future months, Netflix been kind of hanging up here at kind of light volume of these highs. I'm wondering if you don't see some expenses start creeping in and maybe people starting to think, well, maybe it's time for a little bit of a pullback. I would be worried about that on their next earnings call. Start seeing that, like Amazon now starting to get punished a little bit for borrowing yet another $2 billion because they're going to spend it and not really turning on the earnings spigot that everybody says is always going to be there, right?
At some particular, you know what's really going to be wild about that is Alibaba comes in and starts taking Amazon's, deals. So no doubt. Now, do you have Netflix?
I do.
Yeah, it's a great deal.
It's a great
$8.
$8, sir.
$8, folks.
The problem is I have the stuff that I want to watch, like the documentaries.
Right.
They don't get enough new of them.
Okay. Yeah.
I saw a new one.
So you've already seen them.
Yeah. I've seen a new one. I had a new one.
I run into that. And so all you do, then I just don't watch TV for 3 or 4 months, and then I go back. Like I haven't watched it. I just went back to TV like maybe last week, the week before.
I have to hunt.
And it was cool. No,
I have to hunt, and I hate that they don't have a list of all the new stuff.
I know, bummer. Dave White, Tom O'Brien, you stay there. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dave White, Tom O'Brien. We're talking about Netflix, and, you know, when we just coming off, Dave was talking about that, the search mechanism on Netflix. And
they used to have one.
See, I didn't know they used to have one, but that drives me crazy because, you know, when you try to search on Netflix, folks, it's very hard to do. But Dave is just telling me why during the break. And listen to this. This totally makes sense.
They used to have a search and a listing of all the stuff that's new.
Yes.
Now, when they did that, people would just watch new show after new show after new show.
Sure.
And that you might watch 4 hours of Netflix at night. And this is really when, just before the big ISPs here were really getting mad about all the data everybody was using.
Because Netflix is the largest user of ISPs, right?
30% between the hours of 7 and 11 locally in your
In the
area
whole United States.
Yeah.
Oh, my God.
So they're 30% of all the data.
Right.
And somewhere around 15% of the data, even over 24 hours when people are at work. Right?
Okay.
So it's still a huge percentage of the data.
Sure.
But they had this thing where they used to show everybody. Now they changed it, and the whole idea behind it was to make sure that you don't. We were talking about it. It's like a buffet. It's like going to this all-you-can-eat steak place we were going to. They want you to go to that buffet and fill up on salad and maybe a little bit of cheese and everything else.
The Brazilian steakhouses, folks. That's what we're talking. You know, yeah.
I was going to say they give me a nasty look when I go there because I do Atkins
We
diet.
only eat meat, right?
And you know, they come by with the bread, and I said, "Sorry, I can't have it."
Yeah.
They come by with the potatoes. Sorry, I can't have that. So I can choke down probably $50 worth of meat
like
at a
heartbeat.
$27 entrance fee for the brunch. And that's what they don't want either. They want you to spend a little time, get a little tired, and not be watching that all the time.
That's right.
If you do a Google search for what's on Netflix new streaming and put in the date, you'll see a bunch of websites do it. There are some websites trying to fire themselves up to be the search engine for Netflix.
Oh, cool. Okay.
Now, they've gone on and gone off, and I'm not exactly sure whether Netflix is quietly in the background paying them off so they don't do it.
Well, you know
but
what
they do come
you
and
know
they
what
do
I
go.
did here, which is really cool, is that Roku box, right?
Yeah.
Roku, has a great search, and that includes Netflix, right?
It does.
Yeah. So and you can get TFNN right on Roku too, folks. Okay, so we're on there.
We're everywhere.
Yeah, we are. We are. I know. So let's see. The Warrant Canary Dave has up here.
Right now, Apple made a big deal about increased security this week.
Yes.
Now, what we do know is that a lot of these companies, especially Microsoft, anybody that's in cloud services now, Salesforce, all these companies are putting caveats in their terms of service.
Okay.
And if those terms of service change, you want to be watching for them because these provisions are in here are kind of like the poison pill that some stock or some companies put in so that they won't be taken over.
Yes.
Right? Same kind of thing. And the language will be in there will be kind of vague, but it'll say, we have never been approached by the NSA or the government and told to give them data. And then, of course, the next time that comes out, it's missing.
Okay, so
you know that something happened.
And this is really cool. So what Dave's saying specifically, so watch, folks, when the NSA comes in with a warrant, a secret subpoena, the bottom line is that
you can't say anything about it.
What you can do, as Dave is talking about here, is that the Warrant Canary would be that prior to that, the companies have inside their terms of service that we have never been asked for anything. Well, once they are asked for something, they absolutely can pull that out. And that means that, guess what? The NSA has
the NSA can't force them
The way
to
to figure it, folks, the way to figure it is that the NSA has everything.
I think it is. But what we did see is Apple protesting a little bit too much.
Yeah.
And the next day, it came out, and guess what was missing?
What?
Something about how they've never had to give data to the NSA.
There you go.
So,
I heard who's the guy? Is it Peter Thiel, right?
Yeah.
He's the guy that he had an interview. This is a good interview. I like that. He was good, man. And that, and he's the founder of PayPal, right?
Right. One of them.
One of them. Okay. And he was talking about a lot of different things. He was talking about Twitter, right? Was he saying that everyone at Twitter is stoned? I didn't get that.
Yes, he did. So
what he's talking about,
apparently, it's the worst kept secret. I didn't know it, but it is true. They are apparently huge dope heads at Twitter.
And they only work 5 hours a day?
No, but there is the whole thing was a lot of people have gone into meetings, and the people have probably pre-imbibed before they showed up. And I'd never heard about it, but the next day, once he said it out loud, everybody else said, yeah, it's pretty much true.
So listen to this, folks. This is wild. He has a new book, and what the book specifically is about is that as you're creating these new companies, he's for a monopoly, but it's a type of monopoly.
Right. And
he was explaining that if you had a business like that, it's very hard to break it and you can last for a very long time. And that's how the Twitter thing came up about it, right? And so it was so intriguing. And I was listening to that interview, and I didn't even understand what he was saying. And then the next day, it was like, oh, well, I didn't watch TV for the rest of the day. But the next day, evidently, that's what he was talking about, that if you come up with a great idea, well, then you can be stoned for the rest of your life. Right.
Apparently, that's it. He said their idea was so good that they can be bad.
It's crazy, I know. But that's what happens. 5 hours a day of work is about average for an 8-hour day. Not a TFNN. Okay, gender blending flash memory.
Right.
Gender bending.
Right.
Is that bending?
Yep.
Yeah. Okay.
There's two kinds of memory. One is called SLC and another one's called MLC.
Okay.
Now, I just brought this up because we talked a lot about how the hard drive business is changing.
Yes.
One of the things that has been a problem is that if you get let's say a 256 gigabyte hard drive, and it's an SSD, a memory hard drive,
okay,
not a spinning one, that drive probably looks more like about a 300 gigabyte drive, because as memory cells wear out, they have to use the extra spare to make sure that you always have your original 256 gigabytes that you started with.
Okay.
So there's a spare, and as part of it wears out, they just move you to the actual spares. That makes those drives a little bit more expensive, because really you're buying a 300 gigabyte drive, but they're only allowing you to access 256 gigs of it, right?
Okay.
Now, what they've come up with is a new way to make memory that is both SLC and MLC. SLC means just a single cell of memory. You can store a 1 or a 0. MLC is a memory that's been around for a while, but...
Who's making this?
Micron.
Oh, Micron.
Yeah.
Micron, I got it. Okay.
But this memory allows you to store more than 1 bit. So what they're doing is, when that first bit wears out, they just go to the second bit. So basically, 256 gigabyte drives are 256 gigs. It's going to lower the price of these drives, and they're going to continue moving on and into the market.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great weekend, safe weekend. At TFNN, we look forward to speaking there right here next week. Thanks so much, Dave.
You bet.
Go get them, folks.